I'm speaking today with Jonathan Larsen, who is the head of retail banking Asia-wide for Citibank. Previously the head of Citi Singapore, where he made his mark taking the bank from an outfit with about 4 or 5 branches to well over 20. Congratulations, Jonathan. Today we're recognizing you for the Retail Banker Award of the Year. I wonder if you could just sort of take us through some of what you feel are your key accomplishments of the last several years in retail banking, and what do you think their real impact is and where they're going to go?
Well, thanks, Peter. I think, first of all, it's really a great honor to be receiving the Retail Banker of the Year Award for Asia. So that's something that I appreciate. But of course, more than any contribution I may have made, this award really reflects the contribution of thousands of Citi bankers across the region in the 14 countries that we operate in. And I accept it on their behalf. I think for our business, we've gone through several phases over the last decade. I think we've always been strong as a pioneer in the credit card business in Asia and in the wealth management business in Asia. I think that those businesses remain our strength. We're the largest credit card issuer still in the region. We intend to remain so, with number 1 or 2 positions in 8 out of the 12 markets in which we have credit card businesses. And we're also the largest wealth manager in Asia. So between our Citi Gold business and our private bank, we have about $185 billion of client footings, which is larger than any other provider in the space. So these have been tremendous strengths, and both of those businesses have evolved very significantly. And if I just stand back and put that in the context of what's happening in Asia, there are really 2 dominant trends that are reshaping the consumer landscape in this part of the world. One of them, of course, is the growth in consumption, as many of the industrial economies shift to being more balanced economies and growing their consumer base. And the second is the growth in personal wealth and the need for different forms of savings intermediation and financial advice that go with that. And those 2 pillars, the credit card and the personal lending businesses that we have attached or that go alongside the credit card business, and the leadership position that we have in wealth management, really put us in pole position to address both of those things. Having said that, there are many other opportunities that we're focused on. The most important of those is what we call emerging affluence. So I think one of the things that we have done in the last 5 or so years is significantly expand our focus in this area. The Singapore reference point that you kind of alluded to is an interesting one. We indeed had, back in 2005, about literally 4 branches and 1 offsite ATM in the country. We were a leading credit card provider, and we were a very profitable organization. But we were very
mobile sales force and stuff, yeah.
Exactly, through non-branch channels. But we were very much focused on the credit card business, personal lending businesses, mortgage businesses through non-branch channel, and the wealth management business that we have in Singapore. And what we've done in the last 5 or so years is really build out our distribution. We have 24 branches today. We have more than 1,000 branded touch points if you include all of our electronic kiosks, our partnerships with people like AXS, our off-site ATM machines, our SMRT presence, and so forth in that city. And we've transformed the bank from being a fairly niche bank focused on cards and wealth management to being a broad-based financial institution that competes on equal terms with the local banks and does rather well in doing that. And we've expanded our customer base, of course, and of course the strength of the brand and the relevance of that brand and the financial performance of the business reflects that. So, that pattern is something that we're actively pursuing in many markets around the region. Hong Kong is a great example. In the last year, we've gone from 24 branches to just under 50 as we speak, and at the same time tried to build out a range of non-branch channels to significantly ramp up the level of customer acquisition we're doing in our traditional businesses, but also in the emerging affluent segment to really compete head-on with the major local banks. We're doing the same thing in Taiwan. We're doing the same thing in Korea. through, of course, the platform that we acquired 6 years ago, what was then Coram Bank, which of course I was involved in as well, and so forth. So I think this whole emerging affluent space is something that we're very, very focused on alongside our traditional strengths in credit cards and wealth management.
One of the things that you guys do, of course, is I believe you call it Project Rainbow, is you start something in the test market, usually it's Singapore. Could you tell me sort of like how you approach this and how you take it further?
Well, I think technology is a hugely important part of our business. In many ways, the business is technology. We see the whole front end of our business digitizing over the next few years. Much of it already has. In fact, our bank is probably one of the most remote, in inverted commas, banks anywhere in the world.
Through your hubbing and things like that?
Well, just through our use of non-branch channels. Some of that was born by necessity in markets like Malaysia, where we are right now, where today we only have 11 branches, and as of now, we're not allowed to have any more. We're hoping, of course, we'll get more licenses over time. So some of the fact that we've explored and developed, pioneered in many cases, remote channels has been of necessity. Some of it has been through innovations of various kinds and taking advantage of the opportunities that technology present. But today, more than 95% of our transactions happen somewhere other than our branches anyway. But we see the trends that have driven the growth of internet banking, the growth of mobile banking, the growth of mobile payments, the growth of internet payments. We see these trends continuing. We see the new and very important applications emerging for mobile technologies that will reshape our business. So we're investing very heavily, and to your point, achieving commonality when you're a multi-geography business like us is really critical. We can't afford to reinvent the wheel in every country, and there's immense advantage in being able to take something that works in one place and then drop it into 10 or 12 markets. So we're doing that with our internet platform and our mobile platform. They're essentially identical from country to country, of course subject to local interface and regulatory requirements. Equally, we're trying to do this with our back-end systems. So we've taken a generational leap in the architecture of our back-end systems, and I think we're going to be the first bank, certainly for Asia, that has a single platform across the region, front, middleware, and mainframe core product systems. But it doesn't stop there. We're doing this on a global basis. So actually, in a month's time, in our US branches, we're going to be launching the front-end system that we developed for Southeast Asia. Exactly.
And Singapore's the first to sign on to the same.
We launched this, actually we launched our current standard banking platform, an internet-based front-end, a very powerful middleware platform, and common and highly parameterized back-end product processes. We launched this concept a couple of years ago in Southeast Asia across 7 markets, more or less at the same time. Singapore was one of those, Malaysia was another. We're generalizing that to the rest of Asia as we speak, and in specific other parts of the world, including the United States. But the end vision for our company is to have literally one platform. And of course, that brings with it, anyone that knows our business would understand that brings with it huge challenges and huge complexities. But we believe that if we can get it right, the rewards are going to be enormous.
But also a certain type of concentration risk too, wouldn't it be, if you're on one platform?
Well, one instance doesn't necessarily mean one runtime or everything being processed in one data center. So I think we can deal with the concentration risk issues fairly easily.
I mean, one of the, obviously, being a very technology-savvy bank, I kind of wanted to get into the risk associated with technology. I mean, simply because recently we've seen so many sort of foul-ups, especially, I guess, NAB and Commonwealth in Australia. They had ATM and payment problems.
Yep.
DBS in Singapore, quite an embarrassing sort of downtime there in that sense. How do you get around this, and how do you sort of test your systems until they're robust enough to really go forward?
Well, in some ways you can't test the unforeseen and the unforeseeable. So, I think as an industry, all banks are trying to make sure they have, a high level of redundancy, and that they've anticipated every conceivable thing that could stand in the way of operations. And we certainly spend a lot of time trying to think up scenarios of things that we haven't thought of before. So when we see incidents like the ones that you mentioned, and there are others around the world in recent times, which actually go to the core of the basic infrastructure that banks have relied on for decades, of course we try and absorb the lessons and make sure we're rethinking the robustness of our platforms and the ability of our platforms to continue operating and continue providing services, under all scenarios. But there's no guarantee that we have it right, and there's no guarantee that anybody else has it right. We can give it our best effort, and we can make sure we invest in a way that really makes sure that the necessary infrastructure is in place. But as to use the Donald Rumsfeld expression, the unknown unknowns are something that are going to be very difficult for us to anticipate.
One of the things that you guys are clearly chasing is, I think, the one customer view, and I think to apply this, there's the development of cross-border relationships. I guess starting with the affluent clientele, and I suppose eventually moving to all Citi clients, really everywhere where regulations allow.
Yes.
Talking about moving onto this global platform, what's this really going to allow you in terms of sort of actualizing this vision? Well,
I should add, before I answer that fully. Even today, our customers can make online transfers real time between 36 countries on the internet. It is possible to have a global view of your complete relationship with the bank through our One Global View capability. So we've got a lot of capabilities in place that have effectively globalized our proposition. Any Citigold customer in any country is a Citigold customer everywhere, so can go to any branch of Citibank and be served. So we've got a lot of, I think, very strong features that support a global proposition today. But of course, as you say, once you're on the same platform, you can make those value propositions far stronger and make the services and the level of integration of our propositions across countries much more powerful. 30% of our affluent client base has some form of global need, whether it be kids overseas at university, whether it be a global career, whether it's simply someone who travels for business all the time, or somebody who owns real estate or who has family members in another country. In fact, in Asia, when you think of affluent Asians, it's very difficult to imagine people that don't have some form of global linkage these days. So this is a really important thing for us. We think we have real strengths in this area because of our global footprint and our global capabilities, and it's an area that we are focusing on very significantly indeed.
Great. And so what's next for Jonathan Larsen?
Well, we've got a lot of work to do in Asia in the consumer business. As you know, we've launched smart banking across the region. We have about 36 smart banking branches today. This is a new format, it's a new way of doing business, it's a new customer experience.
And you were very central to conceiving that.
I was one of many architects, so this has been a team effort. We had some very good work done in the early days in Singapore. We had some, much of the work was done in Japan over the last couple of years to really get this to be a market-ready capability. And then we've spent a lot of time over the last year or so deploying this around the region. So we now have it in Japan. We just opened 3 smart banking branches in Korea literally 2 weeks ago. We've got more than 20 already in Taiwan. We have 4 or 5 now in Hong Kong. We have a number in China, in Vietnam, in Singapore. And every country will have them over the next few months. We'll have about 100 in place by the end of this year. But this is changing the landscape. It's changing the customer experience. It's changing our business model. So that's one thing that we're working on. The technology we talked about, much work remains to be done. We are continuing to invest in customer service and trying to make sure that every customer experience is a unique experience. That's a fundamental cultural shift. We're trying to continue to remain the leading competitor in the credit card business across the region. We're trying to deploy better digital channels more real-time messaging to our customers, to give them information about their transactions that they need, to be able to anticipate their needs at specific moments in the time through real-time triggers. So we've got an awful lot of work to do. So as far as my own plans are concerned, they're very much focused on continuing to ensure that the Citibank business in Asia grows and is successful.
Okay, great. Well, thanks so much, Jonathan, for talking us through, this vision, and good luck with it.
Thank you very much, Peter.